Hello, everyone. So let's go about last week setups, best setups of the day, not of the day, mostly of London session, but just to share with you the best setups on EURUSD and following each strategies. You can see that every day you can find something which respect one of these strategies. Okay. Sometimes it can be, two strategies at a time. For example, you aim for intermediate term high, and at the same time, it can be a MW or, it doesn't matter. But let's start with Monday, 10:30. Let's go directly into the screenshots. And so Monday 4-hour chart, you can see that we have two beautiful order blocks, which are targets for me, sell-side liquidity targets. So for me, yeah, 100% this was a target, and 99% this one, the low of this one was a target too, because it's below daily range equilibrium, and it's too clean, for any continuation. And I expect price to pull back way below this line. So also, what you can learn from this is I have already taught this pattern in one of my videos, but in case you don't remember it, sometimes the price isn't gonna rebalance always, on the fair value gaps. So here we rebalance, okay, we make intermediate term high, short term high, boom. And here, as you can see, we don't rebalance this one. We form a new structure down, little push down. Here we can expect a rebalance of this fair value gap, but it does not, and it continues to push down, forming an order block or order flow. It's forming an order flow, but again, you have a new dealing range in which you can aim for at least this fair value gap rebalance before continuation. So it does not matter that this one has not been mitigated. If you get an order flow forming like this one, and another chance, another fair value gap, to rebalance, then it's fine, totally fine. So here, the pattern is you wait for an order flow to form, and you trade from the fair value gap inside this range, okay? So here was the idea, the scenario. Now we are into the 15-minute time frame, I believe. Yeah. Premium pricing into the dealing range and accumulation of buys inside the order block. So we are inside the 4-hour order block. We are accumulating buys since Sunday evening, okay, or Asia session, Sunday Asia session. And for me, this was the dealing range, you have to follow kind of the footprints. Of course, you could have put probably better to put the Fibonacci into this high, for the dealing range. But as I saw this as an intermediate term high, which in fact it was not the case at the end, because the day after I think we took this high. But does not matter. You are in this range. Your bias is sell, and we are accumulating buys. So every single lines, even though you make a mistake in the discount premium pricing, most of the parameters are in your favor. And so you could say this is accumulation plus new range strategy. We accumulate buys, we take some liquidity, we induce people to sell, you know, during London, and boom, we take the stop losses. So you can say this is top red, and shift in market structure in the 1 minute. So this is the 2 minute. I put the 2 minute because the fair value gap is looks better, okay, than in the 1 minute. But in the 1 minute, it's clear that we have a shift. So here you sell from there, okay. It's okay. We make an intermediate term high. No worries. It does not invalidate the trade. And then boom, you could take even this one as an entry, stop loss above. And you aim at least for these lows, okay, because those are eternal liquidity. And when you see a reaction from this order block, which took the liquidity, broke the structure, and we have liquidity inducement trap lit, you can be sure that, not sure, but you can expect a pullback at least. And here, as you can see, it was even more than a pullback because it would have taken you into stop loss, at least break even. That's why it's very important to book profits. And what I like about my model of trading is when I reach for 20 pips, especially when there is like a technical place where it could reverse, I will always book 20 pips. However, if we are way below let's say we broke this one and there was nothing, after no reason to pull back, I can trail my stop loss, okay? But since we arrive at a technical area, okay, where it could reverse if your bias, if your analysis is wrong, then you can book profits. It's 1% if you lose, if you use, like me, a regular lot size, okay? And my regular lot size allow me for 10 pips stop loss maximum, which makes 0.5%. So my maximum risk is 0.5%. So my risk is variable. It's not fixed. It's between 0 and 0.5. So if my TP is 5 pips, it will be 0.25% of risk. However, my TP is constant. It's around 1%. Sometimes it can be a little bit less, and sometimes it can be a little bit more, or even 1.5 or 2%. It can happen. But you see, my risk is variable in the right side, and my TP is variable also on the right side. So it's a win-win, okay? Before, I used to trade using fixed risk, like, for example, 0.25% per trade. But I found this way much better and less stressing because you use fixed lots. Therefore, you are not trying to calculate how much you need to put, the size position, etc. You trade always the same lots. You just have to be careful that your stop loss is no more than 10 pips. Okay, that's it. Here, as you can see, it's 3 pips, including the spread. So 3 pips, it's even less than 0.25% risk. And of course, 1% TP. So that was the trade for Monday. Accumulation plus new range. Okay. Now let's go into Tuesday before London. And this was a range within a range. I have put the screenshot on the YouTube community tab to see if some people have guessed the setup. So the daily time frame. In the daily time frame, we are always in the 4-hour, order block, and we have found a fair value gap. This is Monday candle. And now we are going to Tuesday. I want to aim for this one for rebalance before continuing. Okay. And this is the daily fair value gap. This is Monday's high, okay? And this is like a clean range from low to high. It's clear. Why it's clear? Because we have taken this liquidity and we have made a new high. Therefore, people will trade inside this range, okay? Now, we also have inside this range another range where we are accumulating buys, you know, from there to there, because here we have taken the liquidity and we have taken also the liquidity from there. Okay, so that's another range. And what I do in this case, I put two alerts, one alert above, one alert below. Inside this range, I do nothing. I wait. Okay, I wait for one of my alerts to pop. And since my bias is buy, I expect the sell side liquidity to be taken first. And just after, I wait for a quick shift in market structure, you know, and boom. I aim for minimum this buy side, but this one is also very probable, okay? So as you can see, it's the 2 minutes, this one. Yes, so this one was the 15 minute. And this one, 2 minute. In the 2 minute, you have this swing high, which took the sell side. And then boom, we break with displacement. Okay, so this is a displacement candle. And fair value gap, retest, 4 pips stop loss, a little bit less. And boom, almost 25 pips TP. Okay, so a little bit more than 1% into this one. Or you could aim for this buy side, and it was a little bit less than 1%, but if you would have waited just a little bit, you would have reached the percent right there. Okay. And I don't know if you have watched the ICT video about his silver bullet trade, which occurs in London. It occurs in every session, I think, but every session. He talked about the London session, the New York morning, and the New York afternoon session, something like this. But as I trade only London, I focused on the London, and it was between 9 and 10 Paris time. Okay, 9 and 10 Paris time. And so you can trade, the trade is based on a fair value gap forming and going with the bias. Okay, you trade from a fair value gap, which is supporting your bias. So our bias was buy, you remember? Okay, so this was the buy side liquidity. And look, the London Open candle at 9. We just come to retest this little fair value gap and we continue. Okay, so this was a trade as simple as that. And you would see, I have recorded almost every day a silver bullet trade when you have the right bias. And this was a 5-minute time frame. Okay. Let's go into Wednesday setup a little bit after London Open. The strategy was BOS inducement trap, triple, quadruple BOS. And so let's go into, so the first BOS I have counted was, I didn't put it, it was the 4-hour, okay, because we are still in the 4-hour. And we did not take yet the sell side. So the first BOS was the 4-hour order block, which made a BOS, okay? Now let's go to the second BOS, which is this 15-minute order block, boom. BOS, it is unmitigated, okay? It is the one which started the move. And as we have taken all others order blocks, it is the only one left, you know. People will buy from there because we are in the 4-hour order block, which broke the structure. And here we have the confirmation that we have broke the structure. We have a beautiful and mitigated order block. We started the move. Last chance to buy. Okay. Let's go into which time frame is it? 1 minute. So this is not BOS1, this is BOS2. Okay. Because the BOS1 is a 4-hour. But you can count this because usually my setup is triple BOS. Okay. And the triple BOS, you must see it, you know, looking at the minutes time frame, you know, intraday. But if you want to count it as quadruple, this one is the second. Okay. The first one is on the 4-hour. Now, into the 1 minute time frame, you can see another break of structure. And therefore, we have formed a new range. This is a 5-minute order block or the 15-minute. No. Yeah, it's a 5-minute order block inside the 15-minute. We come to retest that order block. Okay. And boom, another break of structure. So when you have already 2 BOS, okay, you can expect to snipe the third one, especially if you are inside a bigger 4-hour OB, and this is like the quadruple BOS, you can be 99% sure that it will not give you a chance of entry other than sniping. It will not do like another shift, because here you can count this as a shift already. You see, this low took the liquidity, induced people to buy. We shift, we induce even more people, we induce people to sell in this, from this high to this low, because this high takes the liquidity right there. Boom, we take the stop loss of the people selling, and you either snipe from this order block or you cannot catch the trade. Okay. And therefore, this can be counted as an intermediate term high and short term high. If you want to trade like this, if you count this as intermediate term high, even though we don't have a fair value gap right there, you see it is forming a swing high, another swing high to the right, and we have a swing high to the left, which makes this one confirmation that this is an intermediate term high. Now that we have the confirmation that this is intermediate term high, because we have formed a swing high, short-term high, you can sell right after this candle formation, okay, from this little red candle, because this one goes above this one. The high is above the high of the left candle and of the right candle, okay? Therefore, you can sell from there and then boom, okay? As you can see, we have targeted at least the 4-hour order block low. And that's why it's important to take profits, because it can pull back, you know, and make you stressful about the position, you know. And here it was already 30 pips. It's enough, you know. Knowing that you can do this every day, it's enough. You shouldn't be aiming for more than 30 pips. If you have like me, of course, stop loss less than 10 pips. Let's say you have 10 pips stop loss, 30 pips, it's RR free, you know. You don't need to make RR20 or 40 or whatever, you know. If you can trade like this every day, do 1%, it's good. and it builds consistency and confidence. Because the thing is, with high risk reward trades, if you catch once per week, but you lose the 3 other days, even though you make the money, you make back the money, with your RR10 or 20, your confidence level, it will not be as great, because it will be very frustrating, to leave your computer in a losing day. And if you are not controlling your emotions, and especially if you don't have a daily drawdown limit, risk management, you can go very far into the drawdown. While if you aim for just quick pips every day, even 10 pips, if you make those 10 pips every day, you will be happy and confident, and you can go about your day without worrying or, obsessing about the losses and whatever. Okay. So now let's see the silver bullet trade, maybe this day, or no silver bullet trades. Okay. The day after, Thursday. Thursday, there was a New York manipulation before 8 inside an important area. This is very important. It has to be inside important area, because this is a continuation trade with no inducements. Okay. So I don't like to trade when there is no inducement, just following the order flow. But in this kind of days, I know I can do it. So this was Wednesday. No, sorry, Tuesday, Wednesday. Okay. We have taken the 4-hour sell side. Now we are into another 4-hour. You remember there was 2 areas, and this is the bottom 4-hour order block, which is also very nice. And what I like about the daily time frame when we are going into impulsive, like trending, when we are trending, it's very useful, the daily, because you just have to follow the candles. Now we have a new order block. Okay, and therefore I mark the bottom of this order block, and I count this as a daily premium. And so people, and I believe the daily close was big candle, and when there is a big candle down, people will think, wow, it's oversold, let's buy. Okay, especially if you are inside the beautiful 4-hour order block. And therefore, we need to reach a daily premium area before selling. Okay, and I don't know why it showed the daily bullet first, and why are we not seeing? I think there is missing, sorry, there is a screenshot which is missing, I believe, because we reach this area, okay, which is maybe around 50 something before 8. Where is it? New York Open. Okay, and it was, yeah, that's why we don't see it. The retest was above. During Asia, we retested, okay, this daily premium, okay, and 0.839, and sorry, before 8 opening, we have a manipulation. Okay, so here we have a manipulation also at the New York Open. We take this little liquidity, boom, you continue, we form a new dealing range. Then again, we manipulate, form an intermediate term high, new dealing range. And that's when it's hard to trade, because you are inside this range. Maybe people are selling, but what's comforting is that we have many order blocks unmitigated. This one, and this one, and this one. And what makes me confident about this trade is that not only we have induced people to sell in this order block, but also we have taken all the internal liquidity, and you see this week, it didn't mitigate this order block. So people who wants to sell here, their order are not taken, okay? They just take the stop losses of people selling right there, and then boom, we continue. Then they play around the break even, but you still have to maintain your stop right there, okay? And then boom, again. And the silver bullet entry, it was in the 5 minute, so London Open, boom, you retest this 5 minute order block. So your stop loss was there initially. Okay, the intermediate term high was there, is there. And now we have made a new break, okay? And you can put your stop right there. It should be fine, okay, if we follow the algorithm order flow. So it's quite a bigger stop loss. It's 7 pips stop loss. It's still okay under 10 pips. You snipe from the bottom of the fair value gap, stop loss above, and you aim at least for the sell side liquidity on the left, so the accumulation of buys. And you can even aim lower, but as you can see, it's 20 pips already. But you can aim lower for the bottom of the 4-hour order block, okay? And I remember this day, it was pretty down, I think. And so now, Friday morning, we needed to wait, and I was impatient this day. I was impatient. I missed this trade. 10-10, it was intermediate term low. And so Frankfurt opening, so start of the day, here, we just came somewhere there, yeah. We just came straight up, okay. Shift in market structure, because this high produced this push down, okay. Boom, shift in market structure. But you cannot buy just right away, because now people are induced to buy, right? So you need to let the market form some inducement for people to sell, you know, especially because we retested this beautiful order block in 5 minutes. Okay, retest, and now we have formed some inducement for sellers. You go into the 1 minute. If you take the Fibonacci on the 5 minute, you will see. You take the Fibonacci from this low to this high. Why is this low? Because this low is an intermediate term low, and we had no re-entry. You see, because I was planning to re-enter right there if we had an entry, but we did not get an entry. And you have to know something. The market movements, you know, there are no, it's not random. People will say it's a random walk, you know, and you can never know what will happen, etc. No, it's not random. And if you believe it's random, therefore you should not be trading, you know. If you are trading something random, it means you are playing casino, you know. It's not random. If it leaves and with some fair value gaps and mitigated, it means that it's planning to do something. And it was planning to just induce people to sell before rocketing again. And so we rebalance in the 5 minute. You can take this fair value gap and snipe right from it. And it's a silver bullet trade because it happened between 9 and 10. Okay. You could just snipe, stop loss below. It was almost 10 pips, a little bit less, a little bit, yeah, a little bit more, but yeah, it's okay, you know, it's half pip more. And you aim for this buy side liquidity at least, okay, which was 25 pips away. So RR 2.5, it's good. Or you can enter into the 1 minute. So you see your silver bullet entry was this week. Okay, so you would have been a little bit into drawdown, but you don't worry about drawdown because you know if it's respecting your plan, if your plan is right, this is intermediate term low. And intermediate term low means your stop loss is safe. You don't care what it does right there. You just snipe and wait. Or you could wait, you could go into the 1 minute rebalance of the fair value gap, which broke the structure. So the displacement candle, this is the displacement candle. Very important candle. You see a reaction from there. We take the swing high. With displacement, again, you trade from the displacement candle for value gap, stop loss below. So you had a tighter stop, 6 pips, and you see it was going pretty fast after that. Okay, so this was it for the week. So the week from the 15th to the 19th of May. This week, I had the time to do the video, so I'm happy about it. And I will try to keep up for next week also. So I may share with you all the setups, and I prefer to share them during the weekend because firstly, I induce no people, you know, with my analysis because the market is closed. And second thing is you are not frustrated because let's say I share with you my setup on Monday, and on Monday you lost your account or you know, you made some losses, and you will see, wow, he has won, you know, and to also all those trades were not live trades. Okay, so those are the best trades of the day. Some were live, some were back tests. And for example, Friday, I was losing, you know, I took some losses. And you see, if I was sharing this on Friday, while, you know, I took some losses, it's not, how to say it, it's not representative, you know. Now I can share it with you during the weekend because you don't care whether this was a live trade or not, you know, it's just for educational purpose. Okay. And now normally we are Sunday, your mind should be at rest, you know, unless you have took some over weekend trades, you know. I hope not. But I prefer to share them after the week is done because I know how it can be very frustrating to see other people win and you are struggling. But know that this is not like the truth, you know. The only truth you could have seen is when I was sharing live trading, you know, in February, March, something like this. I was trading live, and even then, I was not sharing all the trades that I took, you know. I did not share them all, you know. So don't believe everything you see on social medias, whether on YouTube or Instagram or whatever, because if they say that 95% of people are not profitable on the market, it can also mean that 90%, 95% of the people that you see winning on the social medias are in fact losing. Okay, just think about this. It's easy to share the wins. It's easy to share setups like this, like I do right there afterwards. It's harder to show them live. Okay. And, I don't even show you anymore which one is live, which one is backtest, because it has no real purpose, unless one day I will show you live trading or, live accounts, etc. But this is not the case. This is for educational purpose and to show you that the strategies that I found and I shared with you, you can't find them on the market every day. So just I'm trying to share with you like some perception. So maybe one day you will look at the market and you will see nothing, like this is noise. No, this is not noise. This is a range. This is another range. Two bullish range. You want to rebalance there. So this is the scenario you want to rebalance. But since you have a bullish range and another bullish inducement accumulation range, you will not want to buy in this, okay? We first want the buyers to be taken out, okay, from the equation. And then, only then you can start buying. When people will be induced to sell, in this little range. So that's my main purpose by doing those weekly reviews, okay? To show you some new strategies, patterns that you may not see, because I don't think, range within a range, maybe for ICT, it will be Judah swing or something like this, maybe it's the same principle. I don't know. But I think for Judah swing, it's you are using the Asia range or whatever. I'm just sharing my view, okay? And not copying. Um, of course, I'm using the concept ICT, but I'm not trying to sell you the Judah swing. I'm trying to share with you my strategies using the concepts, okay? Especially this one, the New York manipulation, or the manipulation which happens before the 8th opening, so before the Frankfurt opening. If you have mitigated in important areas such as the daily premium, you can expect continuation without inducement. And this is very important. This setup is very important because when I learned last year about ICT, sometimes some days I knew the bias. I was 100% sure about the bias. But since there were no inducement, I had zero confidence to sell, to go with the bias, without any inducement. But now that I have studied this, I just see if there was a manipulation inside an important area before the open, and then I just follow the order flow and see where the intermediate term high or low is to place my stop loss in a safe way, because stop loss placement is very important. Okay, that's it for today. Thanks for watching and see you next week. Trade safe, trade mindlessly. No fear, No FOMO, no fear of losing. Discipline, you follow your plan. If you can't see clearly, then wait. Wait until you can see clearly again. See you next Sunday.